Just a quick detour into some earnings action right now. Tractors manufacturer Escorts has reported first quarter numbers and they've been very healthy and above market expectations. I'll run you through the basic numbers before we get some clarity going from the management. First quarter profit has jumped about 49% on a quarter-on-quarter comparison basis to 28 crore rupees, and when you look at the revenue picture, that's gone up 25% again year-on-year to 1026 crore rupees. I guess comparison on a year-on basis does not year-on-year basis becomes a bit irrelevant due to merger of the three associate firms with itself in about May, I think, last but let's get some clarity going on the numbers right now from Mr. Rajan Nanda. He's the chairman and the managing director of Escorts Group, joining in on the phone line from Faridabad. Mr. Nanda, good morning, sir. Thanks very much for speaking to NDTV Profit. You've got a strong picture on the stock today, up almost 4.5% right now at 69 roughly. Anyway, when we do a quick analysis of your numbers, we'll see that other income has also increased quite sharply, I guess to about 13 or 14 odd crore rupees. Give us a basic sense of how or why you've seen this robust jump in profitability.
Well, this is a strategic management strategy in which we have foreseen that the market is not going to grow because of the recessionary trends, and therefore we had to plan new market entries like luxury tractors, heavy tractors, four-wheel drive tractors, orchard tractors. These are all products that we have created in our technology center, and they've been timed to be introduced in a lean year, which is immediate year. So we'll take our growth on new markets. We'll take moderate growth from existing products, but what we are really doing is entering high value-added products over the products that we merchandise presently. So it is no surprise that you'd see an improvement in EBITDA and PAT, and I hope that trend continues for the remaining months of the fiscal.
Sir, if you can give us a quick sense of tractor volumes, and also I guess, when you were talking about the entire environment and that you had foreseen that there wouldn't be too much of a growth, would you say that perhaps your railway business or agro machinery, those verticals have remained tepid?
Railways have gone down a bit rather than going up because of the lack of orders. I don't think it's going to pick very much up. They are strained with resources, and they have delayed their modernization programs, or it appears so. As far as construction machinery is concerned, that took a deeper dive into recession than even farm machinery. But we are building back, and we've got products that are going back to production. And I think this year we'll have more profits from construction line than we had the year previous. We are shrinking costs. We are correcting our capital management because fitness of a company, commercial fitness of a company is important whether good or bad times. And we're learning those disciplines, and our team is working on them with great dedication and devotion and commitment. And this is why we think we'll keep our head above water, irrespective of how much dip the markets take.
Mr. Nanda, can I infer from what you just told us that going ahead, your auto ancillary products, that might be slightly muted, because in the quarter gone by, in the first quarter, revenues actually from this segment went up by about 23% quarter on quarter?
No, I don't see auto products adding too much growth. I see growth in farm machinery, I see growth in railways, I see growth in construction. On the auto sector, I see a smaller growth, because that is a low-value product line. It's a small product.
Okay. Sir, I'm afraid I don't have the EBITDA margin. Can you give us a sense on that one, please?
Margin on?
Yeah, margins.
Our margins are low there. They would be about 12%.
Okay, just a quick sense on, sir, how you see the outlook going ahead. You did say that there is not going to be too much traction, but Any numbers, any figures of projection, guidance that you'd like to...
If I were to give you an example of tractors, last year to this year, our expectation is just 10% growth on our last year's volume, which is not good, which is disappointing for us. We are hoping for better. It largely depends on what the season emerges. You see, farmer is a mature man, and government is not yet clear about its food policy. We've got a lot of food in warehouse. We've got a changing support price situation. Prices of commodities go up and down. There's so much uncertainty. We hope the stabilization would happen, but I guess everything stabilizes when the government is stable. So we do not know how to predict and what to predict.
Right, right. No, that point noted, sir. Just a quick last word. Any changes, price hikes that you are planning in the coming quarter?
If you're planning new prices and better margins is through new products, not existing products, because I don't think the market can absorb it.
Okay, very candid there, sir. Thanks very much for the clarity and also the outlook and the environment, business environment at this point in time. We've got the stock, Escorts, right now up 3.6% on the bourses. Meanwhile, while we were talking to Mr. Nanda there, we also had UCO Bank